In short-term health insurance, the commercial battleground is moving upstream. Before a buyer lands on a carrier website, compares plans, or fills out a lead form, they may ask an AI system which carriers are worth considering. That answer is not a list of every option in the market. It is a compressed shortlist, and in the June 2026 public benchmark, that shortlist is already concentrating around a small number of carriers. Hey, I'm Mark Huntley, a growth strategist and AI discovery analyst. At LLM Authority Index, we study how AI systems shape commercial discovery, especially in high-intent categories where recommendation positioning can directly influence revenue. The public benchmark looked at short-term health insurance in the United States across 799 observations from 6 AI platforms: ChatGPT, Copilot, Gemini, Google AI Mode, Google AI Overviews, and Perplexity. The key pattern is simple. AI systems are not distributing recommendation power evenly across the category. Pivot Health and Everest are the clear recommendation leaders. Both earned 54 valid recommendations, which means they were positively recommended in roughly 7 out of every 100 AI responses. But Pivot Health had the stronger rank quality. Its average recommended rank was 1.91 compared with Everest at 2.57. It also led the category in rank 1 rate. That matters because the first carrier named gets a very different level of attention than the third or fourth carrier named. The most important business lesson in this benchmark is the gap between being present and being chosen. National General is the clearest example. It had the highest total AI authority value in the data set at more than $564,000 per month. It appeared in 9.9% of observations, which is strong visibility, but only 1.75% of observations produced a valid recommendation for the carrier. So the brand shows up, AI systems recognize it, they retrieve it, but they rarely advance it into the buyer shortlist with strong recommendation credit. Its average recommended rank was 3.92, the weakest among carriers that received recommendations. It also had the lowest net sentiment score among carriers with meaningful presence and the only negative sentiment observations recorded in the data set. That is the danger of using broad AI visibility as the main scorecard. A brand can look visible in reporting while losing the decision moments that matter. The benchmark breaks the public data into 3 high-intent clusters. The first is broad discovery. Buyers asking for the best short-term health insurance plans. This is where the first shortlist forms. Pivot Health led with the strongest ranked position, followed closely by Everest. The second is provider comparison. This is where buyers start weighing specific carriers against each other. Pivot Health again held strong average rank quality, while Everest stayed competitive in top 3 appearances. The third is pricing and cost evaluation. This is the most commercially sensitive cluster in the public data set because the buyer is closer to making a decision. Here, Pivot Health had its strongest average rank at 1.65. Everest remained visible and positively framed, but trailed in rank position. National General had its highest presence rate in this pricing cluster, yet recommendation coverage remained very low. For growth teams, that is the critical distinction. Decision stage prompts are where AI visibility becomes commercial influence. This category is being shaped by citation architecture. AI systems are looking across the public evidence layer, official brand content, structured product information, comparison sources, review signals, and other retrievable material that helps them decide which carrier to recommend. Pivot Health and Everest appear to benefit from stronger public evidence. They are retrieved, framed positively, and placed into recommendation positions more consistently. Everest is especially interesting because it had the highest net sentiment score in the category at 0.56. When it appears, the framing is very positive, but it often sits behind Pivot Health in the shortlist, which limits first choice positioning. National General shows the opposite pattern. It is widely retrieved, but the aggregate signal appears mixed enough to weaken recommendation eligibility. One pattern we repeatedly see at LLM Authority Index is that brands can look visible while still losing the buying moments that matter most. For executives in insurance, healthcare marketing, and performance acquisition, this benchmark points to a measurement problem. Mentions are useful, but they do not tell you whether AI systems are recommending the brand. Share of voice can be helpful, but it can hide weak shortlist performance. The metrics that matter are recommendation coverage, average recommended rank, rank 1 rate, sentiment, and performance inside high-intent prompt clusters. The goal is not simply to appear in more AI answers. The goal is to earn positive, ranked, shortlist quality recommendations when buyers ask for help deciding. That requires improving the public evidence layer around the brand. clearer product information, stronger entity structure, better comparison context, and sources that AI systems can retrieve and trust. The leadership takeaway is that short-term health insurance is already experiencing recommendation compression. A small group of carriers is capturing most of the AI recommendation value, while others are still being mentioned without earning buyer shortlist position. For CMOs and growth leaders, the priority is to separate visibility from recommendation control. If AI systems mention your brand but recommend someone else, the buyer journey is being shaped before your team ever sees the lead. If you want to understand how AI is actually positioning your company in buyer conversations, that's exactly what we analyze at LLM Authority Index.